What's up everyone, welcome back to the channel. Today's video we're going to be running through Texas Roadhouse. We're going to run through all the good points, all the bad points, what they're doing in regards to the COVID-19 situation, the risks associated with Texas Roadhouse, and look at their numbers and their growth and their balance sheet, and then I'll give you my overall opinion. So I hope you enjoy the video and let's get straight into it. Texas Roadhouse is a steakhouse, a restaurant chain in the United States. They do have some restaurants internationally, but the majority of their restaurants are in the United States. So Texas Roadhouse have pretty high quality food and healthy food, which is a good thing in my opinion, because I believe consumer trends are continually leaning towards more healthy options. So you don't want to bet against the trend. So they're majority a steakhouse, and they have in each of their restaurants they have a person dedicated to hand cutting the steaks on site, which is a nice touch. So they have high quality ingredients and high quality food and high quality service. All their managers and staff are highly trained by the restaurant chain. They have dedicated trainers to make sure that there's consistency across all their restaurants and excellent service. They have a kind of a Western atmosphere with neon lighting. They have TVs everywhere across the restaurant, so if you're coming you can watch your favorite sports. They also want to be kind of a local family favorite, so they're majority positioned in local suburban areas rather than towns where there's more competition. So they're more in suburban areas where there's less competition, so families will just go to their local favorite. That's the idea there. Managers also get performance-based compensation, so the better their restaurants are doing, the better they'll get paid. So that's a good incentive for the managers to make sure everything's running smoothly and customers are having a great time. They also treat their staff very well, and the staff aren't overextended across a large number of tables, which is really good, because I've worked as a waiter myself, and the lower the tables the better you can look after them. So, but you don't want too few tables, but you definitely don't want too many tables where you can't actually look after your customers at all. They don't do normal advertising like most restaurants. They're mostly going after social media, which is the best form of advertising in my opinion for a restaurant, particularly stuff like Instagram, where you can actually see the food, because food is very visual. We need to see, if we see a photo on Instagram of like a nice steak, then we're more likely to want to go there and want to enjoy that food or alcohol. They also have an email loyalty program, which was extremely successful in a restaurant I worked in. So basically at the end of your meal, your waiter will come up to you and ask you if you'd like to sign up for the email list, and you get really good rewards through the email, and that encourages customers to come back and back. And they only open for lunch on the weekends, so their staff aren't spread too thin in that regard either. So they don't have to work lunch and dinner every single day, just on the weekends. This means they can provide really high quality service on a dinner shift. They also have a pretty good rating on Glassdoor. Glassdoor is where, say if I'm a staff member, I can rate the company to work for. So if I'm an employee of Texas Roadhouse, I can rate it on Glassdoor and say, oh, really good management, blah 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 blah. So particularly restaurants are not just in competition for customers, they're also in competition for good staff in the area. If they have the highest rating on Glassdoor, that means they'll get the best staff, which means that they'll have the best customer service. Okay, another great thing about Texas Roadhouse is their management is extremely responsible. They haven't tried to overextend themselves and grow too fast. Like this might be good in the short term to open a lot of restaurants to try and cash grab as much as possible in the short term. But a lot of times if you do that, you're taking on a lot of debt and you're overextending yourself. And if those restaurants don't do as well as you plan, then you're kind of screwed. However, Texas Roadhouse are growing at a sustainable rate. When they're sure that their current restaurants are profitable, then they're expanding at a manageable rate. And before the COVID-19 situation, they had $0 on their long-term debt on their balance sheet. So no debt at all. But they've had to take out some debt now to deal with the COVID-19 situation. But it just goes to show you how responsible they are to have no long-term debt at all. So yeah, as I mentioned, they have a really, really strong balance sheet. They had 100 million in cash before the COVID-19 situation, but now they've taken out 190 million in debt to deal with the situation. So they do have some debt and quite a lot of cash they're in a very, very strong position to get through this situation. So the fact that Texas Roadhouse's balance sheet is so pristine and they're in such a good position to deal with this COVID-19 situation, it might mean like some of their competitors will be in a worse off position. So they might have overextended themselves, taken on too much debt, and now they have to take on more debt at unfavorable rates because they already have so much debt. Or they might even go out of business, which would eliminate competition or make that competition less likely to be able to expand well in the future. So let's just run through what they've done in regards to the COVID-19 situation. Like pretty much every restaurant chain, they've suspended buybacks and they've suspended dividends, which were both very healthy before this, but they've cut them out both completely, which is completely the right decision. They've also almost completely cut capital expenditure, except for 9 restaurants, which were almost completed anyway. All the executives have forgone pay in the short term, so they're kind of being an example for the whole industry in the fact that they're still paying their staff and they're really looking after their staff during this time. They've taken on more debt, as I mentioned, to continue paying their staff, as well as the CEO has donated his own money, $5 million worth, to continue helping his roadies, as he calls them. They're very adaptable, so they've transitioned to doing curbside, selling steaks curbside, as well as doing to go, and they've even done you can cook at home meals, so they just sell you the steak with all the seasoning, you grill it at home. So they're just trying different things, and it's working well enough. Obviously the sales have taken a huge hit because of the coronavirus, and it's going to be even worse in Q2. They were doing well in January and February. Obviously March and April are much worse, and it will continue to be worse in the short term. Okay, so let's run through the numbers, which is the most impressive thing about Texas Roadhouse in my opinion. Okay, so the most important metric when looking at a restaurant chain is the comparable sales growth. So the comparable sales growth is the sales growth not because of expanding the amount of restaurants, but just in the restaurants that they already have. So if sales growth in one particular restaurant, so that's been about 5% for the last number of years, and it was 5% in 2019, which is decent growth. It means the restaurants are getting more and more popular without having to actually invest more money to open more and more restaurants. So that's just organic growth from the restaurants getting more and more popular as time goes on. So that's excellent to see. The revenue is growing at 11% a year, which is not crazy growth. It's not the kind of growth you'd want to see for a 25 PE ratio, which Texas Roadhouse has. The stock is a little bit pricey for this kind of growth. So usually you'd want to see a PE ratio in line with the growth number. So maybe you'd want to see a 20% revenue growth and a 15 PE, but that's very hard to find, especially in such a pricey stock market like we have at the moment. So the EBITDA, the earnings are a little bit less predictable because they're expanding, they're opening new restaurants, which obviously requires a lot of capital. So this isn't the same every single year they're spending, so their earnings aren't as predictable. However, it's about 9% a year. Their dividend and their buybacks were really strong when times were good. As I mentioned already, they've been cut entirely, but before they were cut, so we get an idea of the dividend, it was 2.5% to trailing PE. The trailing dividend is 2.5% with a payout ratio of 60%, but it's probably a little bit less than 60% because that's taken into account today's earnings. So the dividend growth rate was in the double digits for 7 consecutive years, which is really strong dividend growth rate. So this would, if we're buying now and Texas Roadhouse goes back to the kind of growth that I had before and the success that I had before, we'll be looking at a nice dividend grower in the future. And they were also buying back quite a significant amount of shares. So they're really a company that's committed to rewarding the shareholders. So it's nice to be potentially buying at this small dip that we have at the moment in Texas Roadhouse stock. So yeah, as I mentioned, I really like their management and the CEO. The CEO has a big stake in the company, and a few of the executives also have a decent stake in the company. So the total insider stake is 6%, which isn't huge, but it certainly isn't tiny or non-existent either. So it's always good to see some insider ownership in the company, because at least they believe in the company enough that they believe it will be worth more in the future. So obviously their sales are going to take a huge hit in the short term. They're doing everything they can to survive, and I believe they definitely will, just because of their strong balance sheet. However, it's going to be a tough few months for them, so we might see some more stock dips in this stock, so there might be more buying opportunities in the coming months, but we have to see how everything plays out. We don't know how well their company and their brand image will do internationally. They've expanded to some like Middle Eastern countries and Asian countries, but I'm not sure how well it would do in Europe. We've yet to see how it would do in the likes of Europe or Australia. To be honest, personally, I don't think it would do that well, but we have no idea yet how much international markets will enjoy the restaurant. I'd rather see the majority of the sales growth coming from comparable sales growth, comparable stores sales growth, but the majority of the growth is coming from opening new restaurants. So at least they are getting some growth just organically from the existing stores sales growth. However, to continue this kind of growth, it means that they're going to have to continue opening new stores, and maybe this could mean that they will expand it into the entire United States, and there's not really any more great places to open a restaurant which will be profitable. So eventually they're going to reach a tipping point where they can't just expand indefinitely. But I don't think they're anywhere near that point just yet. I think this is far in the future, because there's a lot of people in America who like steak still, so there's still plenty of room to grow for the next at least 5 years, in my opinion. So yeah, obviously competition is huge in this industry. There's the Cheesecake Factory, there's BJ's restaurants, there's plenty of competition. So the restaurant industry never really has a huge moat around it. Like, usually you want to invest in companies that have a moat around them that can't be crossed, that really stops competition from taking their business away. But you can't really do this in the restaurant industry. You only need a few $1 million to open a restaurant in a good location. It's not a huge barrier to entry, relatively speaking. The only moat they can really do is through their brand image and their high quality food and high quality customer service. But pretty much a lot of restaurants can do this as well. So this is one of the weaker points for investing in restaurant chains. They're also obviously heavily reliant on beef, so they mentioned this in their 10K. So say if there's some sort of mad cow disease comes back up again, or the trend towards veganism or vegetarianism could potentially have an impact on their sales. And the final risk for Texas Roadhouse is a recession, and a recession is looks highly likely at the moment. So in the last recession, their stock price dropped by 75%, but that was from peak to trough. So we're already down about 25%. So it would mean another 25% from here. So not a huge drop. It recovered pretty nicely straight away from that. So I would just view a recession as a good buying opportunity for Texas Roadhouse. So what are my closing thoughts on Texas Roadhouse? Well, I've already opened initial position in Texas Roadhouse, and I think I might make it into a medium-sized position. A lot of the stocks I've analysed recently, I've just kept them as small positions to look at later. But Texas Roadhouse, upon doing heavy research into it, I'm more confident in this stock, and I think it's really well run. I think it has a good brand, and I think it has great potential to grow in the future. So I'm looking to make it a medium-sized position, and I'm hoping in the near to medium term we're going to have continued lowered prices for Texas Roadhouse, and I hope and I think we will see some better buying opportunities for Texas Roadhouse, because it is a little bit pricey at the moment. So I'd like to see a bit of a drop in the coming months so I can add to my position. Alright, so I really hope you enjoyed this deep dive analysis into Texas Roadhouse. If you did, please drop me a like, it would be hugely appreciated. I have some more interesting videos coming up, so make sure to subscribe. Thanks so much for watching. I really appreciate it. I really hope you learned something, and I really hope you enjoyed the video. So with all that said, thank you so much. Goodbye. Cheers.